A company's stock doesn't just wake up one morning and decide to jump 30%. Something has to happen, something big. Today, we're diving into the anatomy of a truly blowout quarter from innovative Aerosystems. We're going to unpack exactly how they pulled off such a shocking result, what it tells us about their long-term strategy, and of course, what it all means going forward. Let's dig in.
And this is what I'm talking about, a 30.76% surge in a single day. Moves like this are incredibly rare, and it tells you one thing very clearly. Wall Street wasn't just impressed, they were completely and totally caught by surprise.
So a massive move like that begs the question, right? What on earth was in that earnings report to cause such a fundamental repricing of the company? Well, to understand that, we have to look under the hood.
Okay, let's break down the exact numbers that absolutely powered this incredible performance.
And wow, here they are. So on the top line, revenue came in at $22.2 million. The consensus on the street was for about $18 million, so they crushed that by over $4 million. But honestly, that's not even the real story here. The real story is the bottom line. Look at GAAP earnings per share. Wall Street was expecting 9 cents. They printed 39 cents. It's the same thing with non-GAAP. You can't even call these beats. This is a total demolition of expectation.
And this chart just puts it all into perspective, doesn't it? That tiny little bar on the right, that's what analysts thought they would earn. And the giant bar next to it, that's what they actually did. It is more than 4 times the original estimate. This is a perfect example of something called operating leverage. It's when every extra dollar of sales brings a much, much bigger chunk of profit with it. And that is what gets investors so incredibly excited.
And the strength wasn't just in 1 or 2 places. It was broad-based. Gross margins were an incredible 63%. Adjusted EBITDA was up over 70% from last year. Free cash flow exploded, up over 500%. And maybe the most important number here, new orders came in at $27 million. That's more than the revenue they just recognized, which tells you the demand is still accelerating. The whole business is just firing on all cylinders.
Now, a quarter like this, it doesn't happen by accident. This is the payoff. This is the result of a deliberate, long-term strategy that management has been patiently building for years.
So what have they been up to? Well, they made some really smart investments. They expanded their Exton facility, which actually tripled their production capacity. They integrated a new ERP system, which you can think of as like a new central nervous system for the whole business, just making everything run smarter and more efficiently. And they're really starting to see the benefits, the synergies from that Honeywell acquisition. All these pieces are just clicking into place. And this right here is the end goal. This is what it's all about. Management has put a stake in the ground. They're targeting $250 million in revenue by fiscal 2029, with some seriously attractive EBIT margins in the 25 to 30% range. After a quarter like this one, that long-term vision, it suddenly feels a whole lot more achievable.
And a huge piece of that future growth is going to come from their brand new Liberty flight deck. Now, this isn't some overnight success story. It's a really strategic, multi-year play. They just unveiled it back in October, but the real work is still ahead. They're targeting certifications around 2027, with full production really starting to ramp up near the end of the decade. This is their next big growth engine.
And I love this quote from the CEO Shahram Oscar because it just perfectly captures their secret sauce. We provide the solution to the customer of what they want, not what we have. In a market that's just full of one-size-fits-all products, they offer customization, and they can do it without the massive non-recurring engineering costs. That flexibility is a powerful, powerful competitive advantage.
But, for all this celebration, management was also really quick to inject a dose of reality into the conversation. They wanted to make sure they were managing expectations for the year ahead.
Because even though that long-term picture looks fantastic, the next fiscal year, well, it comes with a few pretty important caveats.
And the most important point they made was about something called a revenue pull forward. So what does that mean? Basically, to help with a facility move, they did some work and recognized the revenue for it this quarter, when it was originally planned for next year. So it's like they borrowed sales from the future. It made this quarter look even better, sure, but it also creates a much tougher comparison for them to beat next year.
And what about that eye-popping 63% gross margin? Well, management was really clear about this. That is not the new normal. It was boosted by what they called a favorable sales mix, which just means they sold more of their highest profitability products, plus some one-time benefits. They expect those margins to come back down to earth, settling into their more typical mid-40s range.
So you put it all together, you've got this incredible blowout quarter on one hand and a more cautious outlook on the other.
What's our final call? Here's what we expect to happen next.
For the next earnings report, we are predicting another beat, but a much more modest one. The real focus for us and what you should be watching isn't the top line. It's all about the gross margins. Seeing where they land relative to that mid-40s target is going to be the key signal for the health of the business mix.
Now, in terms of price action, after a 30% rocket launch, you've got to expect the stock to take a breather. We expect a period of consolidation, just trading sideways for a bit. The market now has to digest this huge run-up and balance it with the more tempered guidance for fiscal 26. A pause here would be perfectly healthy and totally expected.
So, our FILO rating is outperform. Look, the tempered guidance for the near term is well understood by the market at this point. But the underlying story here is one of absolutely exceptional execution, expanding capabilities, and a very clear path to significant long-term growth. Management has earned a ton of credibility, and that 2029 vision is the real prize.
And a final reminder, as always, this content is for informational purposes only and is not financial advice.